Good morning. Welcome to the Brew. I am your host, Lex. And you know what day it is? It's Friday. That means we're talking with our good friend, Paulina Likos. So today we're going to talk about and ask the question, are you diversified or concentrated? And understand what that is. So let's get to it with the two lovely ladies who are going to join me in 1 second. Good morning, ladies. How are you?
Doing great. How are you?
I'm doing great. Mal, I did get the black shirt memo. Thank God for that. Molly is on mute, but who's counting?
Right.
Oh,
All right.
technology, Paulina. You know how this goes, right?
No worries.
No worries. No, Mal, I was saying about the memo and our black outfits.
Yeah.
You're either black or
crazy.
white. I know that. I'm always a weird
Yeah.
color, but generally dark. So, Paulina, you look great
So-
too. My gosh, and I think that's a lilac thing there or something. I don't know. I can't tell very well.
Oh, it's
Yeah,
beautiful.
I try to bring some color now that the fall is here. So
I love it. I love it.
All right.
All right. So we are going to talk about diversification or not in a portfolio, right? So that's the topic, the hot topic of the morning here. What do you have for us there? I'm not sure how I feel about this one. I need to listen a little bit because I can be persuaded either way. And don't forget your cohort over here, the conspiracy theorist, Miss Molly. Who knows where that one ends up? We never know.
yeah, I think diversification is a really important topic to debate and discuss because we always hear from financial advisors, investment experts, regardless of where you are in your investment journey, diversification is great. And it absolutely is. It's a fundamental investing principle that nearly every investor should follow. However, there's another camp that says maybe being more concentrated in certain sectors, certain stocks might be another strategy that you can focus on. So we don't really hear that side of the debate that often. So I kind of wanted to shed light on both to see what people might resonate with more.
Okay, good. Molly, where do you fall, would you say? Diversification, concentration?
Diversification. Absolutely. So I like to be even geography and geopolitics also, has a play in how I balance my portfolio and, definitely across sectors, but you can tell everything's sort of spearheading towards AI. So I'm sure Pauline is going to share something amazing with, like you take Tesla, they have many companies within one company. And so we'll probably see how that world is changing, that you can be diversified within one stock.
Okay. And Paulina, do you have a favorite side of this equation, do you think, or not really?
I would say diversification. Obviously, I think it's really important to spread your risk across a variety of different sectors and companies. I will say though, for people who are really big on research and taking control over, their investment portfolio, I think that it's totally fair to be more concentrated in a company or sector or a handful of companies that are, that you really believe in.
Okay. Fair enough. Okay. Tell us a little bit about this then. Tell me, your model, or I don't know if it's a model is the right word, but your thoughts on diversification. What's kind of, some good lessons here for us.
Yeah, so as a journalist, I never assume anything. So I assume that some people might not know what diversification is. So I just wanted to kind of, explain what it is and why it's important. It's obviously, as I mentioned, a fundamental investing principle that every investor tends to follow, even investors who might be, risk averse. Have some sort of way to mitigate risk through diversification. And the way you kind of do that is by breaking your portfolio up between different asset classes like stocks, bonds, precious metals, commodities and today even cryptocurrencies. So, if you want to be more risky, you allocate your assets towards, more price sensitive assets like stocks, and reduce your exposure to more safe assets like bonds. But overall diversification, I think, is important, because if you want to have a balanced portfolio, it's important to kind of protect your overall investments from not being impacted by one particular asset class. So that's essentially what diversification is, and why it's important.
Okay, so
And
here's how I think about it. Quick. So
quick question: do you diversify, or what is your strategy for your portfolio?
for mine or for Paulina's?
For you. So for your portfolio, what do you
Oh,
do
no, I
with
put it all in crypto and close my eyes and hope it all works. That's all.
All right.
Isn't that a good
All right.
strategy?
I love it. Let's go with
Okay,
that.
just kidding. No, so and your question, Mal, is kind of sort of my question for Paulina is, so to me, diversification has two little steps to it, right? One of them is if I were invested all in stocks, I could have a diverse portfolio of different types of stocks in different sectors, in which case, some sectors may be, dear and near and doing well, and other ones don't, versus having a diversification of instruments. So bonds versus stocks that you mentioned. So I guess there's two levels of it, right? So if I'm a really, really young person, which I was a long time ago, I might be diversified in the stock market only and not be diversified with bonds, because I have so much time to go as a young person. Again, I'm speaking in the past. So I might want to say, hey, let's roll it here, because I've got a long time to catch up, versus, where you get off, where you are in a little bit later stage of life, you might want to have that 50-50 split, bonds to stocks. Does any of that make sense, or am I gibberishing again?
Yeah, absolutely. Having different levels of diversification, I totally see what you're saying.
Yeah.
I think in that case, though, you would have to be mindful of not being over diversified, because that can stunt your portfolio growth. It can also cost more in terms of, added fees and portfolio manager costs related to that, and that can bring down your the growth of your overall gains and so forth. So I definitely see the merit of investing across different asset classes like stocks and bonds, and also trying to diversify across sectors, making sure you capture growth at an early stage company, but also maybe even a more mature company within a certain sector. But I think that you want to be mindful of not being too diversified, which will impact your future returns.
Got it. Molly, you were going to say something. Sorry, I might have interrupted you.
I'm always about to say something. That's the problem here. So
That's true. Don't tell me to put my hat back on, okay?
I was going to say put it on backwards. We need it on backwards today. It's Friday.
Okay. So you were saying, sorry.
Interesting enough, we've got some news happening in geopolitically and in Israel, and so in a terrible situation. People are, there's a lot of quantitative, financial support for some of these initiatives, which may, shrink the impetus to invest in U.S. bonds if we are over leveraging ourselves, driving up the yields, maybe discounting face values of those previously established bonds. So, how do you see that, and how do you incorporate that when something big like this happens?
Well, I think for long-term investors, it's important to have, their long-term investment thesis. And just because a geopolitical event occurs, or, a black swan event occurs, or any sort of event in history occurs, that shouldn't change your investment thesis. You're supposed to have your investment principles and stick with them and weather these, storms, whether it be, the war that's happening in Israel or the war that's happening in Ukraine or the geopolitical tensions in Asia. There's a lot going on in the world. So I think having a portfolio that you believe in good times and bad times is ultimately the best answer.
Mm-hmm. And I think that speaks to what Lex always professes is discipline. So how did you incorporate discipline, Lex, in your career?
Well, you mean
regarding geopolitics?
Yeah. So I didn't, my career was different. I was a trader, not an investor. Right. So that there's a big difference there. We live day by day. So,
yeah,
that I wouldn't call that investing. So anything I took out of the market from my trading part of my life would go into investment. And guess what? I wouldn't do it because I don't know what I'm doing. I send it to a professional person who knows what he or she is investing in. Because I couldn't, I don't know, look I don't follow companies like Paulina does, and maybe you do, Mal. Yeah, right. So all I know is trading discipline from a true trading side, right? And that's not investing at all. So that's why, for me, especially, it was important to have a really good person, I'm calling a financial planner. Is that the right word? Someone who knows how to invest your money. Because I couldn't do that. That's not what I did.
Yeah.
I mean, you could see that, couldn't you, Paulina? I mean, a trader has to get as far away from trading when it comes to investing as possible.
Yeah, they're two totally different activities. Like you said, a trader is more kind of day to day. You have your own investing strategies that are more short term in nature versus a long term investor. They do have their long term strategy, but again, there's nuances for long term investing as well. Are you more of a passive investor where you kind of set it and forget it, or are you more of an active investor where you do constant research on companies? You're invested in individual stocks. You may not want to invest in these, index funds, mutual funds. You prefer to take a more active approach. So it depends what type of, market participant you are, I would say.
Yeah. Ma, what about you? What kind of market participant are you? You crazy
I think I'm both.
Things in your ears?
My marshmallows.
Yeah, your marshmallows.
Puff that comes out of my blonde brain. So I think there's a really cool edge. I mean, I'm probably all over the place, but I think there's a really cool edge on, and I'd like to ask more of what you have going on your sheet there, because I know you're going to unload some really neat stuff. But just on this, if you don't know where to go, you can access in this day and age a database of congressional trades, which is the new hot thing, and so you can see where they're headed and what stocks they might be trading, and so you can that's a real edge.
Wait, that's an edge because they already know what they're going to say about the company before they invest in it.
Right. And they may often say different things than what their investments say.
You mean I can get that information and make trades on it?
You can. Yeah.
Jeez, you can. I love it. Right. Well, by the way, I'm being silly a little bit, but in reality, when we were in the trading business, we would always want to have that sort of knowledge. So if I could find out what Goldman was doing, what Chase, what all those big banks were doing relative to order flow, that's a huge piece of edge to have.
Absolutely.
I don't know how would you go in the investing world. Sorry.
And where would you go harvest that information?
Did you just say harvest?
Can we get a bell? Can we get that bell?
So, data's changed so much, and Paulina, I think you're in the midst of a data world. You get it all. But when we first started down on the floors, the only data we had, I guess, obviously we have open interest and volume. We could see that, but we could actually see the origin of those orders, right? It was fair game, and it was, presented to us. Goldman comes in the trading crowd physically with the broker and says, we have 10,000 of these things to buy. What do you think that's going to do to the marketplace, right? Now, the retail trader, and Paulina, sorry to bore you with this stuff, but the retail trader is, what we are all about now. That the retail trader doesn't have that information. It's not the same. That's an institutional level of edge that they just don't see necessarily. Now, there's some there's some things out there that you can get, but they're in a box compared to that. Now, back to, Paulina's whole point here, and yours, Molly, I would say more than ever, the retail person who's investing and or trading has so much information at his or her fingertips. It's unbelievable. So now all
On
of a
this
sudden,
thing right here, right in their pocket.
yeah, it's unreal. Then now you have to say, well, what am I going to be? Am I going to be diversified? Am I going to be concentrated or not? And, I like diversification too. I'm just not sure. Can I diversify in a handful of companies? Paulina, I guess you said I could, but that's not really truly diversified, I suppose, right? I'm not sure how to think about it.
Yeah, so that's a really good question. And obviously, not a financial advisor and definitely not giving any financial advice.
Disclaimers everywhere. See, I just wrote it on my forehead. I am not,
Right.
and neither is Paulina and Molly.
Right. But people want to be investing in the large cap, large cap tech companies like Apple, Tesla, Microsoft, all those big tech companies. So the argument there would be, why would you invest in all of them? Why don't you just invest in one of them? Well, that
interesting.
Doesn't really make it too much sense, because each of them have different business models. Each of them have different levels of growth. So there's an argument to invest in all of those, big companies, for so many different reasons, obviously, mainly because they consist of such a large portion of the overall S&P 500, but also because they've experienced such a high level of growth over the past 2 decades. But when tech isn't doing well, what are you going to rely on? How are you going to psychologically, because that's a huge part of not only investing but trading, how are you psychologically going to deal with those losses? Well, that's where diversification comes in. That's where you invest in the more safe sectors like consumer staples or energy, depending on how the environment is. So yeah, I would say that it's important to kind of see what the anatomy of your portfolio looks like. And if you're comfortable with the losses that you have, then maybe it's all about, who you are as an investor or trader and what your goals are. There's so many different factors at play, really.
Yeah. And I would think that, all that being said, which I totally agree with, there's also, levels of investment, meaning levels of net worth and worth. So if you have, $1 million versus 100 million, there's a different concept going on there, right? Or for that matter, 1 billion. There's all those have different value systems. So I'm not sure. At some point, you may have so much money, it almost doesn't matter. You have enough in the nest egg to live your lifestyle plus, and then the rest is, the fun money to make it generational, I suppose. But not everyone's in that situation, clearly, right? So you have to think more realistic. I'm trying to think, is there any argument not to diversify? I can't really think of one unless maybe you have one. Probably not, right?
You might. Yeah.
No, go ahead, Molly.
Go ahead, Mal.
Oh, no, you go ahead. Go ahead.
Well, I think that's a really important question. Is there a case or a situation where you shouldn't diversify, or maybe diversifying maybe is not the best option? And I wanted to give an example of a critic, if you will, of diversification, and that's Warren Buffett. He's one of the greatest investors of all time, and he doesn't really believe in diversification, this investment principle that everyone follows. A majority of Buffett's holdings are concentrated across a few sectors: tech, financials, staples, and energy. I think Apple actually represents about 50% of his portfolio's total value.
Wow.
So I pulled actually a quote from Warren Buffett to kind of elucidate his thoughts on diversification. And he said, quote unquote, "Diversification is protection against ignorance. It makes little sense," he says, "if you know what you're doing." And I think by knowing what you're doing, he means knowing how to find stellar, fantastic businesses that have a long-term trajectory for growth. But as we were saying earlier, if Buffett wins, he wins big. If he loses, his losses, he'll be able to weather those losses versus an average investor might not be able to do that. And that's why financial advisors say, don't put all your eggs in one basket. Because if one investment loses, you'll be able to recover by being diversified into other areas.
Right.
However, even with that said, I think that Buffett makes a good point. If you do your due diligence and believe in the business, then why is it such a bad thing to make high stakes investments?
Mm-hmm. That's a really good point that I never thought of, because that's a good one. Buffett is a perfect example of that. But the other side of it is, as you said, he's got infinite money, and to invest. So not the end of the world. The other thing too is, I wonder how much the average person can study a company like he can. He's not giving himself enough credit in terms of his intelligence.
Quants on his side.
Yeah, I mean I'm from Chicago. He's the Michael Jordan of investing. He's one of the greatest, and he understands it so well. So, from his perspective, it might be a little bit biased, jaded, I suppose. But it's a good point. I still like it. I'm thinking of how does that work in the real world? You have to be a student.
Well, in the Buffett Way, it's a great book, The Buffett Way. But his style is that and I heard him say one day that he just sits around with his, Coca-Cola that he loves, and he reads 10Ks all day. And so those 10Ks really reveal absolutely everything, and we all have access to it. And sometimes, a company can be shorted, and although that might reveal some cracks in a company, it can also be, sometimes nefariously shorted without real backing. And you can uncover that through a 10K and actually pick those stocks up if it's being shorted at a real discount. Yeah.
Yeah. No, that's pretty good. I like that too. Okay. So even after saying Mr. Buffett's name, are we still in favor of diversification?
I think so. I think it's important to be diversified. I think the average investor needs to be able to understand how to put a portfolio together that's sustainable in different economic environments. And unless you're Warren Buffett, I don't think it's realistic to be concentrated into a few companies. I think you need to spread your risk across.
I like it. Okay, I like it.
This is a really yeah. Oh, go ahead.
No, I was gonna say I was gonna let Paulina go to her next adventure, because she's got bigger fish to slay. Okay. Were you going to ask her one more question, Mal? We'll get one more out of you.
No, thanks, Paulina. No, I was just going to say that thank you, that you are really an incredible researcher. So getting this information direct from you is really a neat thing. So thanks for sharing.
Thanks for coming on, as always. You have a great weekend. I hope you have big things in store. I hope you're getting to learn the city again, or not again, but anew. So. All right. We'll talk to you soon, Paulina. Thanks. You have a great weekend. See you soon.
Bye-bye.
Thanks, Paulina.
Okay. Hello, Mal.
I'll just say one. I know. Hey, Legs. I'll just say one thing about the future, and especially with retail traders. They're really coming out, and I find that, there's a community establishing around a sector. And so they become really proficient in the technology of that one sector, and they're really sharing their knowledge with each other. And so you can actually be diversified within a sector. So for instance, in the automobile strike, the automotive strike that we saw with UAW, there was, in that same sector, Tesla is not union. And so they weren't so affected, where, companies in the same sector might have been. So you can diversify with it there. And equally, you can dive into that kind of detail. But I was also, in the Reddit community, you can just find those. I would always say, I'm sort of veering on Buffett's, what Paulina mentioned, that if you really know a sector, if you're an engineer and you know something about, a technology, stay in your wheelhouse, and you'll be able to analyze the fluff from the fact much better and share your knowledge with the rest of us.
Right. No, I like it.
Yeah.
I like it. All right. Well, I'll see you next week, Molly, since it's Friday already.
Friday. Oh, so great.
Have a good weekend.
All right. Enjoy Pilates.
What happens on Fridays? Pilates Friday.
Pilates Friday.
All
All
right.
right, Lex. Thanks.
You have a good one. See you guys.
All right. Bye.
Bye.